Hello. My name is Avira Joseph. I am the founder of Blue Academy. This is 12/16, the 9th day of January 2026. This will be my first recording, first video on the 9th of January 2026. And we'll be continuing our trading strategy, 5 were wise, 5 were foolish. Continuing using how to trade the trade the forex market using fundamental news plus hedging. So I want to say Happy New Year to you. Happy New Year once again. It's going to be a prosperous year. So today by 2:30 and also 4 p.m. 2:30 p.m. and 4 p.m. we'll have various fundamental news that will be released. So we want to take advantage of this fundamental news to trade the forex market. So by 2:30 we have average hourly earnings that will be released month over month, non-farm employment change, unemployment rate. Then by 4 p.m. we have prelim UOM consumer sentiment, prelim UOM inflation expectation. So these are the fundamental news that will be released today. So we want to take advantage of these to trade the forex market. And as usual, how we do that is to open 5 buy position, 5 sell position. We set our profit target and we wait for the market to do its thing, volatility to do its thing. If our profit is greater than 10%, our profit is greater than $10, we close out and leave the market. So I'll be heading over to my broker now to do this, MT5 to do this. So the account size I'm starting with to use for this strategy is a $200 account size. And don't forget that my first account I lost it because I lost it in one of the strategy, of the fundamental news that was released last year towards the end of the year. So I told you guys that I made loss that day, but we go again. So today we are going to use a lot size of 0.01. We're starting afresh. And we're going to open 5 buy positions, 5 sell positions. You can see the buy position at the top right of your screen. How did I get here? For those guys that are new on this video, will be new on this video, the currency pair we are trading is gold, XAUUSD. To highlight on it, click on chart. So the middle here is the lot size area. We change it from 0.02 to 0.01. So I'm going to open 5 buy positions, 5 sell positions. And I'm going to set my profit target and my stop loss for each of these positions. So let me do that right away. One, 2, 3, 4, 5. So just done that. I've opened 5 buy positions, 5 sell position. I'm going to set my stop loss and take profit for all these positions. For the 5 were wise, 5 were foolish trading strategy, if you could remember, if you've been following me from last year, remember that my take profit for the buy, is 10, 20, 30, 40, 50. And for the sell, all the sell is minus 10, minus 20, minus 30, minus 40, minus 50. So what this my plus 10, plus 20, plus 30, plus 40, plus 50 means is that for the first buy, you're going to add 10 to the entry price. That's going to be your take profit point. So let me just do that. So for my first buy, I'm going to add 10 to the entry price. The entry price is, let me highlight it, click on modify position. The entry price for the first buy is 4463.61. So we're going to put 4473.61. 43.61. Four four 83.67. That is the second buy. So I'm adding 20 to the second buy position. Four four 93.66. Four four. Okay, 445 03.63. Then the last buy, I'll add 50 to the entry price. 444513.64. So for the sell, I'm going to subtract minus 10 from the first entry price. This is the sell position. Click on modify. Minus 10 from 4463.47 is the take profit will be 4453.47. For the second sell, I'm going to subtract minus 20 from the entry price, so it's 4443.61. For the third sell is 4433. I'm going to subtract 30 from the entry price, so it's 4433.60. The fourth sell, I'm going to subtract 40 from the entry price. Okay, it's as if we have hit our first profit point has been reached already. So I'm going to subtract 40 from the entry price. Is 4423.62. Click on modify. For the last cell, I'm going to subtract. What am I subtracting for the last cell? The last cell, I'm going to subtract 50 from the entry price. So this is 4413.62. Click on modify. So for my buy, what I did, okay, see the first buy is almost hitting the profit point. Okay, it's at, okay, the first buy position has entered. So let me go back and see it. You can see $10 has been added to the price. So my first buy has hit its profit target. So we're going to allow it to do its thing. If it comes down to the entry price to a tone where I make up to $10, I'm going to close out and leave the market. So now for the buy, the first buy, you can see that it has hit its profit point. The first buy is to add 10 to the entry price. The second buy 10 to the entry 20 to the entry price. The third buy 30 to the entry price. The fourth buy 40 to the entry price. The fifth buy 50 to the entry price. For the sell is to subtract 10 from the entry price. The second sell, you subtract 20 from the entry price. The third sell, you subtract 30 from the entry price. The fourth sell, you subtract 40 from the entry price. The fifth sell, you subtract 50 from the entry price. Now for the stop loss, for the buy, the stop loss for all the buy is the entry price, the take profit price for the last sale. I'll take that again. The stop loss for all the buy, it is the entry price, the take profit point for the last sale. So this is the last sale. The take profit is 4413.62. So that's going to be the stop loss for all the buy. Let me modify the position. 4413.62. Let me just copy it. Okay, it's almost 330, 230. So let me modify it quick. Modify. Click on paste. Click on modify. Click on paste. Click on modify. So this is the stop loss for all the buy. Now the stop loss for all the sell is the take profit point for the last buy. I'll take that again. The stop loss for all the sell is the take profit for the last buy. So what is the take profit for the last buy? The take profit for the last buy is 4513. Let me even copy that. Copy. Go back. Start modifying all the sell. Just stop loss. Paste. Modify. So today's market is going to be volatile because we have many fundamental news that we release at the same time. But what is going to make it more volatile is the non-farm payroll that will be released then. So I'm modifying all the sell. Modify all the sell, their stop loss. So we are 1 minute, less than 1 minute to 2:30 to the broken news that will be released. So this is the last sell. I click paste and modify. So I've set a profit target. Let's go back to our Forex Factory calendar and click on today. So you can see from the recording, it's just a countdown to when the breaking news will be released, when average hourly earnings will be released for United States dollars, non-farm employment change will be released for the United States dollars, and unemployment rate will be released for the United States dollars. So 5 seconds, 4 seconds, 3, 2, 1, 0, 2:30. So this is 2:30 now. We are waiting for the news to be released, expecting volatility. Now for the non-farm employment change has been released. The forecast was 66. The actual is now 50. Now let us check this news and see what is there. They say if the actual is greater than forecast, is good for currency. What this means is, if what was released, let me close out. If what was released here was greater than the forecast, it means it's good for the currency. It means it'll be good for United States dollar. So since what was released here is less than the forecast, it means people will be selling the United States dollars to buy the gold, to buy other currency. And what they're trading is gold against the United States dollars. So people will be selling the United States dollars to buy gold. Now for the next fundamental news that was released still the same time by 2:30, they say the forecast is actually Let's check the news, what they say about it. See, if the actual is less than forecast, it's good for currency. And actually, the actual was less than forecast. So if the actual is less than forecast, it's good for the currency. At this point, people are going to be buying the gold, buying dollar to sell the gold. So we have buyers and sellers that are placed in a confusing point. So there'll be high buying and high selling occurring now because the actual is less than the forecast for non-farm employment change, and the actual is greater than forecast for the non-farm employment change. So let's go back to our account, our broker, to see how the market is behaving to this market outlook. Okay, so it's bullish. Okay, it's bullish. So people are actually selling the United States dollars to buy gold. The reason they are doing this is because of non-farm employment change, which the actual was 50K and the forecast was 66. The actual was less than the forecast. So because the actual was less than the forecast and the non-farm employment change is a strong fundamental news, people will be selling the United States dollars to buy gold. But we have unemployment rate, which is also a strong fundamental news, and the actual was less than forecast, which is also good for currency. So it is good for United States dollar. So people will have to be selling their gold to buy the United States dollar. So buyers and sellers at this period are they are like somewhat in a strait. People will be buying, people will be selling. So it's who the highest buyer or the highest seller is who will win the market. So I want volatility to do its thing, and I'll come back to check my trade whether I'm a profit. If I'm a profit, I'll close out and leave. Okay, very good. Three buy positions have entered. The first one has entered, which is 10. The second one has entered, which is 20. And it has increased my capital to 229.81. So it's a good one. I like how the market is reacting to this news. So the market has gone up 200 pips in less than 3 minutes, in less than 4 minutes. So it's still, market is still bullish. Let's see whether it will close out from all our trade before it start correcting, because the market is going to correct because of the unemployment rate that is less than, that the actual is less than the forecast, which is also good for the currency because that one will also have to play out. And don't forget, by 4 o'clock, we also have fundamental news that will be released, which is also going to affect the markets. So let's see how the market plays out. If I'm a profit, I'll come back to tell you I'm a profit. If I'm a loss, I'll come back to tell you I'm a loss. If I want to close out from this trade, I'm going to click this horizontal dot at the top right. Click on close all positions. So let me leave it. So here you can see how the market is behaved. The bullish candle stick is going up. It's going up. It's going up. It's going up to 4493. Going up to 4493. So if the price of gold retraces to 4463, comes down to 4463, I'm going to be in $30 profit. So anytime I come back to check my trade and I see that it has come down and I'm in the least I can take is $10 and I'm in at least $10 profit, I'll close out and leave the market. So let me allow the market to do its thing. I'll come back to check this trade. If I'm a profit, I'll tell you I'm profit. If I'm in loss, I'm going to tell you I am in loss.